AI is going to replace jobs in a way that we have never seen before, and it is going to financially destroy a lot of people. But it's also going to create opportunity for some. Just take a listen to what the CEO of Claude had to say. It's hard to estimate, exactly what the impact would be, and there's always this question of adaptation, and these technology changes have happened before. But I think what is striking to me about this AI boom is that it's bigger and it's broader and it's moving faster than anything has before. And so compared to previous technology changes, I'm a little bit more worried about the labor impact, simply because it's happening so fast. That yes, people will adapt, but they may not adapt fast enough. And as this AI shift takes place, it's going to change how we work. My prediction is that work will be optional. I mean, it'll be like playing sports or a video game or something like that. But do you know what else is going to flip besides jobs? Money. Whether or not the government passes some sort of universal basic income, you're still going to need money. And as AI gets smarter, it's not only going to wipe out certain jobs, but it's going to hurt certain industries, and it's going to bankrupt certain stocks. In just the last few months, we've seen AI develop so much that we've seen concerns about software companies going bankrupt because of AI. We've heard concerns about financial service companies getting hurt because AI is going to take their market share. And now we're hearing that even cybersecurity stocks could be hurt because of how fast AI is evolving. That means you need to not just be thinking about AI-proofing your career, but also AI-proofing your investment portfolio. That's why in this video, I want to show you 5 different AI-proof investments that you can make with specific ETF examples. That way, no matter what's happening with AI, you have an investment portfolio that can benefit whether or not AI is taking jobs. And this is why if you've been feeling a little bit uneasy about your investments or thinking about retirement through all the craziness that we've been seeing in the economy, not just with AI and technology, but with geopolitics and changes with our money and the Federal Reserve Bank. That's why on March 18th, I'm hosting a live, free, and virtual investor workshop to go over how these changes are happening in our economy and how these changes create new and unique investment opportunities for the financially savvy. Because all these changes create investment opportunities if you know how to identify them. On this workshop, which is free and live, I'll be showing you our firm's research as to how money is moving and how you can invest better based off of these movements that are happening with money right now. This is a completely free workshop. I'm doing it live and twice on March 18th, once at 10:30 a.m. Eastern Time, again in the evening at 8 p.m. Eastern Time, but you do have to register. I have the link for you down in the description below. And as an added bonus, when you actually show up live on the workshop on March 18th, my team is going to email you a free digital copy of our new book, How Money Changed Forever. But you're only going to get a digital copy of this book when you show up live on March 18th. So I can't wait to see you there. Number 1 and most obvious is real estate. Because regardless of how smart AI gets, regardless of how good robots get, even if robots start building houses, you'll still need a place to sleep at night. And this is where investing in real estate can be an opportunity for you, because people will need places to stay. Some people will own, some people will rent, but that creates an opportunity. But it's not just houses, it's also apartment complexes. It's also storage, because people will have stuff that they want to store. And people will still want to go out to eat at restaurants. People will still want places to go to. So these buildings will still exist for people to go to. There'll just be more robots inside of them. And realistically, if we look at the state of the housing market today, the United States still has a housing shortage with millions of houses short of what we need to be able to have an equal supply and demand housing market. And realistically, if AI does take more jobs in the near future, that's going to mean that more people will not be able to purchase a house. Because if people are struggling or they lose their jobs, they're less likely to qualify for a house. That could lead to more foreclosures, which means more people might be forced to rent. That's good for landlords or the people that own that real estate. So when it comes to investing in real estate, there is the residential real estate, which is where people need to sleep. Then there is the experience real estate, which is you going to a restaurant, you going to a store, which is what people will still be doing. And then there is the technology side, which is as AI continues to develop. Well, the AI is going to need physical buildings like data centers to be able to store all the data, because you cannot have AI without these data centers. And these data centers, when you store something in the cloud, it's not in the sky. It is in a physical building called a data center. And all 3 of these can create an investment opportunity for you. Now, I'm going to go over specific examples. I am not telling you what to do. I'm just a random guy on YouTube. investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But let me go over some ETF examples. That way you understand different ways that you can start thinking like an investor. Example number 1, residential real estate. Here's a couple examples. REIS. This is an ETF that's going to give you exposure not just to residential real estate, which is single-family houses and multifamily apartments, but it also has some exposure into things like healthcare buildings and self-storage buildings as well. Example number 2, a little bit more broad, is ETF VNQ. This is created by Vanguard, and this is going to give you exposure across more than 160 real estate companies in residential real estate, commercial real estate, and specialized properties. So, we're talking about broad American real estate that you're getting exposure to with VNQ. Then we have real estate type number 2, more of the experience side, going to a store, going to the mall, going to a restaurant. This is you doing something, and all of this experience is owned by some sort of real estate company, and you can invest in those real estate companies as well. Here are a couple examples. Now for these, because it's a little bit more niche, I'm going to give you specific companies. Again, I'm not telling you what to invest in, just showing you how to think like an investor. But example number 1 is stock ticker O. This is Really Income. And this real estate company owns more than 15,000 properties, which invests in the real estate for things like McDonald's and 7-Eleven and Walgreens. Another example in a real estate company that's investing in these types of places is NNN, which is also going to give you more of that exposure into these retail type of buildings. And the last but not least is the data center itself. Because in order for AI to work, we have to be able to store that data. And this data is stored in a physical data center. And there are real estate companies that specialize in owning and operating these data centers. Again, I'm going to go over some specific examples, just showing you how you can start thinking like an investor. Example number 1 is stock ticker EQIX. This is a company called Equinix, and this is the world's largest data center real estate company. They're operating more than 260 data centers around the world. And this is working with a lot of the big tech names like Microsoft, Google, Amazon, and a lot of the big AI companies. That way they can control the physical real estate for the data centers. Another example of a major data center player which gives the exposure to the real estate space is DLR. This is another company that has exposure to hundreds of data centers around the world, with some of the biggest tech companies again. So we know that AI is coming for white-collar jobs, and robots are coming for blue-collar jobs. But people are always going to need a place to sleep. People are always going to need a place to go and eat and shop, and people are still going to need a place to operate those data centers. But the other thing that people will need is food. People will still need to eat. People will still want to go to restaurants, which creates another opportunity for the food and restaurant industry. Now, I know what you're thinking, but Jasp, they're already building robots to flip burgers. Yes, but that restaurant business is still going to exist. The restaurant business is going to exist, and that business will use more robotics and AI in the future, but that restaurant business will still be needed to produce the food. In fact, these experiences are going to become even more important, but I'll talk more about that in just a minute. But the idea is, there is a third home that gets created when you go to something like a Starbucks or a cafe or a coffee shop, because it's like a place where you can go and just work and hang out. And people want more of those things now because people just felt kind of isolated, especially after the pandemic with people still working from home. They like to go to a place where they can go and eat, hang out, and get some work done. And that can create an investment opportunity because regardless of what happens with AI, people are still going to need to eat. So how can you invest in the space? Well, in my research, there's only one major ETF that's going to give you exposure to the restaurant industry, and that's BITE. This is an ETF that's going to give you exposure to dozens of restaurant companies, from fast food to casual dining to coffee chains. So if you believe that this food industry is going to boom, well then this is an ETF that can give you broad exposure to the food industry. Now yes, you can get more niche and invest into more specific companies. For example, QSR is an ETF that gives you exposure to a company called Restaurant Brands. This is the company that owns Burger King and Tim Hortons and Popeyes. So you can get exposure to that company, or you can invest in something like McDonald's, or you can invest in something like Starbucks. So you can invest into an individual company, or this ETF if you want more broader exposure. So now we understand that AI could take away the work that people do in front of a screen, and robots could do the work that people have to do physically. And with that, people will still need a place to sleep, and people will still need to eat. But the idea is, if people are going to need to do less time in front of a screen, they might be able to spend more time on experiences. And this is where you can invest in experience economy things, where people will have to go and physically do something, because we're starting to see a little bit of a resurgence of this, because people want to go and do things instead of just playing more video games on their computer. Now, you might say something like, well, Jasper, if people don't have jobs, how are they going to pay for a vacation or this experience? Well, stick with me until the end of this video so I can talk a little bit deeper about that. But there's a couple broad ETFs that can give you exposure to these types of experiences. Number one is Jets. This is an ETF that's going to give you broad exposure into the airline industry. So this is going to invest in things like airlines and hotels and airports. That way, if there are more people flying and traveling, this ETF would benefit. Another one is Away, AWY. This is an ETF that's going to give you more exposure into hotels, airlines, and cruises. So this is more of a broad travel play. So if people have more time to travel and have these experiences, this ETF would benefit from that. Now again, just like before, you can also invest into individual companies. I'll give you a couple examples. Again, I'm not telling you what to invest in, just showing you how you can start thinking like an investor. In the hotel space, you have M, that's the Marriott chain, and then you have HLT, the Hilton chain. Those are both different investment opportunities. Or if you wanted to go more into the entertainment space, Live Nation, the company that hosts concerts and other shows, this is their stock ticker symbol, LYV, which will give you exposure to the entertainment space. Number 4 is investing into the AI revolution itself. What we've talked about so far is how AI is going to change the job market because AI is working to eliminate white-collar work, while robotics are going to be eliminating a lot of blue-collar work. And the idea behind this is even if that happens, people will still need a place to sleep for real estate. People will still want to go out to shop and eat, which benefits real estate. People will still need those data centers because these AI companies need those data centers. Well, at the same time, these restaurant chains still need people to go out and eat, even if they're run by robots. So that can be another potential investment opportunity that's AI-proof. Then we talked about experiences that if people don't have to work, and we'll talk about the income side in just a little bit, but if people don't have to work, they might have time for more experiences, more vacation, more travel, which could create an opportunity here. We talked about different ways to play that. Well, what about the AI revolution itself? Because we know how much money, how much energy is going into AI. Maybe that's something that you can consider investing in as well. Now, I do have to caution you that with AI, because of how volatile it is, because of how fast it's growing, it's going to go up and down. There's a chance that we could see an AI bubble. That doesn't mean that AI is going to go away. That means a certain AI valuations could drastically fall. So understand that when it comes to more of these tech side of investments, you're going to see more volatility and factor that in. You can see more upside, but more volatility comes along with it. I'm going to go over 5 different broad ways that you can invest into this AI space. Example number 1 is investing in an ETF SMH. This is going to give you more broad exposure into the semiconductor industry. This is the chips that are powering the AI, because in order to have this AI, you need smart computers. Well, SMH is going to give you exposure to these semiconductors, to these chips that are powering all these smart computers that are powering the robotics that's powering the AI. You cannot have AI without these chips. It doesn't matter if we're talking about ChatGPT, Claude, or Gemini. If you want to go a little bit more broad, we can talk about the NASDAQ 100 ETF. These are the top 100 companies in the stock market which are not financial, which means these are primarily tech companies. And you can invest into these top 100 companies in the stock market that are not financial. It's called the NASDAQ 100 through an ETF like QQQ. Now, these are primarily tech companies. And because of that, it is much more volatile than the general stock market, which means markets are going up. This is generally going up even more. When markets are going down, this is generally going down even more. So if you're going to invest here, just understand the volatility that comes along with it as well. Then we have BOTZ, BOTS. This is an ETF that's going to give you more broad exposure into the robotics industry and some AI as well. These are companies that are actually building the machines that are going to change the job market. If you want exposure into the AI and robotics space, but you want to be a little bit broader, here's an ETF that can give you exposure to that. ROBT. This is an ETF that is now going to give you exposure to the AI companies, the software companies, the hardware companies, and the robotics companies across the United States and internationally. So if you just want broad AI exposure, this is one way to get that type of exposure. And then, of course, like I talked about in the real estate section, in order for AI to work, you need these data centers. And there are data center companies out there that you can invest in. Or you can invest in ETF like DTCR, which is giving you broad exposure to the data center industry itself. Because in order for AI to work, all this data has to be stored somewhere. And that is these data centers. And these data centers have to exist as of today in order for these AIs to work. And last but definitely not least is energy. Now, what we talked about so far is how AI is going to change the job market. But regardless of what happens in the job market, people are going to still need money, which is why your investments have to be still cared for. And now, as the job market is changing, you want to make sure you are also AI-proofing some of your investments as well. And so we talked about 5 industries that can be protected from this growth in AI. So we started by talking about real estate because people will always need a place to sleep. People will always want to go to the store or a restaurant, and people will still need data centers. So we talked about different ways to play the real estate space. Then we talked about the food industry, that people still need food in order to survive, even in AI day and age. Even though some of these restaurants might be operated by robots, people still need the food, and you can invest in those restaurant businesses. Then we talked about experiences. If people have more time, they may be able to spend more time on these experiences traveling, which could create a potential investment opportunity if that's something you believe in. Then we talked about investing the actual AI revolution itself, because we know that there's a lot of money going into AI and robotics. And you can invest in the backbone of that through the semiconductors, through the data centers, or you can invest directly into the robotics ETFs and funds as well. Now, in order for all of that to work, we need energy, because the one constraint, the biggest constraint that we have for AI and robotics right now, is the amount of energy it takes to actually produce these things. So let's talk about that. And that's why, again, on March 18th, I have my live investor workshop, because I'll be going over how these changes create investment opportunities for you. So if you want to see how you can position your portfolio better in this changing economy, I invite you to join me. The link is free down in the description. Every time you go into ChatGPT and you ask a question, electricity gets consumed. And as more and more businesses use AI, more and more people use AI, the amount of energy we need to power all of this AI keeps going up, which is why we're seeing the amount of energy going to AI skyrocket. Well, it doesn't look like that trend is slowing down, and this can also create a potential investment opportunity for you to invest into these energy industries. Let me explain. Example number 1 is XLU. This is an ETF that's going to give you exposure into the utilities industry, because this is investing in 30+ utility companies in the S&P 500. So this is giving you exposure to the power grid that's powering AI. Then we have example number 2, which is VPU. This is an ETF created by Vanguard, which is going to give you exposure again to the utilities industries. This is very similar to XLU. You have a little bit of a lower expense ratio here, meaning less fees, which is going to still give you exposure to the energy space. Or if you wanted to go a little bit more broad, you can look at something like PAVE. This is an ETF that's going to give you exposure to United States infrastructure development. So this isn't just utilities. This is the companies that are maintaining the physical infrastructure, the power grids, the pipes, the roads, the industrial equipment here in the United States, which you still need in order to fuel and power all the AI that we have. So now we talked about some AI-proof industries and some industries that benefit with AI, including things like real estate, investing in food, investing in experiences, investing in the AI revolution, then of course energy. But the question on many people's minds is, well, Jasp, if AI really does succeed and we see unemployment go to 10%, 15%, 20%, well, then we're going to have so many people without jobs. How are they going to fund anything? And really the answer is, I don't know just yet. What we have seen happen throughout history, because, well, history doesn't exactly repeat itself, it does rhyme, is anytime we see a shift in technology, it generally creates more jobs than it displaces. But generally, you have a lot of time to see the displacement happen. Right now, with AI, it is growing faster than anything we've ever seen before. So, what will likely happen based off of the information we have today? We're going to see more jobs get displaced than get created, at least in the short term, Maybe in the future it will create more jobs. That's what the goal is. That's what a lot of people say will happen. But in the short term, it looks like if things continue the way that they are today, we're going to lose more jobs than we gain, at least in the coming short term, at least in the coming years. So, what is going to happen? And this is where we really don't know. There's a chance that we could see something like a universal basic income provided by the government or private companies to support the people that don't have jobs. We'll see what ultimately happens. But what we know is that the goal is to be able to create more jobs than it displaces. Because at the end of the day, for anything to be able to function, people need money to be able to buy the food, to rent the real estate, to go on these trips and the experiences, and to be able to use the AI and actually go shopping or spend money or buy food. So we don't know what will happen just yet. We haven't really heard much from the government side, and there's a lot of different opinions of what will happen. That's the part where it's the biggest question mark. Of course, we'll be keeping you posted here, but this is why it is so important for you to be an investor, because the last thing that you want is to rely on somebody like the government to be able to take care of you. So number one, get smarter about AI. Learn how to use it. And if you don't know how, ask Chat, ask Claude, ask Gemini, ask Perplexity. I don't care what you use, ask it. How can I get smarter with AI for my career? That way I have more job security. That way I can continue to compete in this new day and age and learn how to invest your money smarter through this changing economy. Because it's not just jobs that are going to get wiped out, but certain stocks are also going to get wiped out if they're not competing, if they're not learning how to use AI as well. So I hope you got a lot of value out of this video. The best thank you is a referral. Again, if you could please share this video with a friend, family member, colleague, or fellow investor. That way we can continue to spread this type of financial education. Thank you. President Trump just confirmed that he wants to get rid of your income tax. Take a listen. I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax, taking a great financial burden off the people that I love. Lord.